This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashir-Reyes. Thanks for joining us at XM.com. Friday's flurry of data produced a distinguishingly mixed picture on the U.S. economy, but for the markets, it was an all-around positive day as traders grew more confident that inflationary pressures are ebbing. The first piece of good news for the bulls came from the December jobs report, which showed another beat in the headline payrolls figure, but average earnings moderated sharply. Wages rose by a much smaller than expected 4.6% annually in December, and payrolls for November were also revised lower, further bolstering the view that the U.S. labor market is cooling off. There was more good news later in the session as both the ISM non-manufacturing PMI and factory orders disappointed. Investors didn't waste any time paring back expectations about how aggressively the Federal Reserve will hike rates in 2023. However, aside from the Fed's Bostic and George repeating the case for rates to hit at least 5% this year, soon after the data came out, traders overlooked another sign that casts doubt on the claim that the labor market is losing steam. Revisions in the household survey showed employment jumped by 717,000 jobs in December, more than offsetting the combined losses in October and November, which were less than previously thought. The U.S. jobless rate is now back at a multi-decade low of 3.5%, giving the Fed little reason to pause its tightening campaign. Nevertheless, investors are feeling upbeat. They could have more to celebrate on Thursday, when the next CPI report is due. With the inflation rate forecast to drop to 6.5% in December, Friday's rebound on Wall Street may just be the start. After surging more than 2% on Friday, S&P 500 futures are currently trading about 0.3% higher. Commodities such as crude oil and copper have surged by between 2 and 3% on Monday on expectations that Chinese demand is making a swift recovery. Gold is also enjoying a revival, extending an uptrend that began in early November. In the FX world, the U.S. dollar declined to new lows, coming within a whisker of hitting 7-month lows against a basket of currencies. The pound, Aussie, and Kiwi were some of the better performers today, though the Canadian dollar continued to lag somewhat, despite a very robust Canadian employment report on Friday. This is today's Daily Market Comment. Thanks for joining us at XM.com.